Hi, welcome back to Bazaar Morning Call. This morning we wake up to negative cues from across the globe. The SGX Nifty is down 65 points, Dow futures are under pressure. So let's see how our own markets react. But for now, our entire team is here with us to give you the list of top 10 stocks as we head into trade this morning. Anuj, let me begin with you. On the index, considering that we have some weak cues, Wipro's earnings were not good, do you expect a tepid start and how do you take it from there? And what are the stocks that you would be looking at?
Yeah, so we'll have a slightly weak start and then we'll take it from there, Sonia. Like I said, let's see if there's some stability, first half of stability between yesterday's low and 87.50. That's the zone. Now, in terms of stocks, these are not essentially about the day, and there's a chance that, just for the day, they may move on the opposite side. But ITC is a stock which has now become the go-to stock. And if you see, there's clearly been some bit of accumulation in ITC. The question that I ask myself is delivery buying of 4,000 crores in last 12 days, and in that period the stock has moved up from 144 to 190. Is it showing the same signs that Hindustan Unilever did in early 2010s, which is when it was ending a decade of bear market, and after that it just went on to its a completely different orbit? We'll find out the answer to that, but there are some early signs of that. Titan is the stock that I'm watching out for on the downside. The market right now is punishing stocks which are expensive and where there's going to be earnings hit over the next 3 to 6 months. There are a lot of stocks in that category. Titan is one of them. Bajaj Finance is one of them. PVR is one of them. So many of these stocks where they were expensive and there's going to be clearly an earnings hit, and that's why you need to adjust your view on these stocks. That's under pressure. And finally, Aurobindo Pharma, what a dream run it's been for pharma. In the near term, it's overbought, but it's a stock which has crossed 200 DMA and is trading above it. So it remains among the more inexpensive stocks in the sector.
Yeah, pharma has been, of course, the flag bearer. With that, let's go to the stock that we should be watching out for today, Wipro. Anisha, numbers disappointed?
Yes, the numbers disappointed, and to add to that, the management commentary was also very weak. In fact, the management talked about how the revenues might decline in the coming quarter. They're seeing pressure on margins as well, given the fact that they are hearing about budget cuts as well as discretionary spend cuts, and that is something that might worry the street today. Apart from that, in terms of the Q4 numbers, it missed the street expectations as well as its own guidance. The dollar revenue came in at $2,070 million as compared to our expectation of $2,095 million. Yes, the management alluded to a bit of impact of COVID-19, but even then the numbers are weak. The operating margin came in at 7-quarter low at 17.6%. Only saving grace is the fact that constant currency came in at 0.4%. Other than that, in terms of verticals, BFS are disappointed with a decline of 1% sequentially on constant currency basis. Brokerages, as a result, have cut their target price. Jefferies has cut the number slightly, but CLSA believes that it is going to be a revenue decline in Q1 FY21, and they expect gradual recovery only in 2021, and that's why they have lowered the target price all the way to 180.
All right, Anisha, thanks a lot. Sure, thanks a lot for that. Well, let's move on and hop across to Nigel. He's watching out for Tata Steel this morning. Nigel.
Well, Sonia, S&P, the rating agency has gone ahead and lowered its rating on Tata Steel. They say that they're expecting the leverage to go up from here, and that's why they're maintaining a negative outlook going ahead. Earlier, they'd expected that the earnings will improve, but now they're saying that it is unlikely to improve for the next 12 to around 18 months. On the back of that, they're increasing their net debt to EBITDA expectations to 6 to 8 times. Earlier, they were expecting it to come down to around 4.5 times odd. And also their funds from operations to debt, now they're factoring in it at around 5%. Earlier, they were factoring in funds from operation at around 10% of the debt. So on the back of these factors and higher debt, they're expecting, that's the reason that they've downgraded their rating. Back to you all.
Okay, thanks a lot for that. Dr. Reddy's in the news. Ekta, you could get any clarity?
Well, Lata, the reports are indicating that they are in the early stages of developing a generic version of Remdesivir. Now, remember, Remdesivir is basically the Gilead drug which was being developed for Ebola and had failed the trials at that point in time. And now it is expected to probably help in terms of the COVID-19, the kind of COVID-19 drugs which are available at this point in time. So Dr. Reddy's, it's going to be a long haul, but you can probably expect expect compulsory licensing as a possible option as well. Now, compulsory licensing is where companies are allowed to manufacture the generic version of a drug in terms of emergency use. So maybe that could be another option to look at for many companies, including Dr. Reddy's. We haven't confirmed the report independently from Dr. Reddy's, but nonetheless, that stock would continue to be in focus.
All right, Ekta, thanks a lot. Yes, we'll keep an eye on Dr. Reddy's like we do for entire pharma space. But there are some companies with partial resumption of operations. Mangalam has a list of those companies. Mangalam?
Well, absolutely. You know, as the lockdown days go by, the non-essential things start becoming essential. You know, maybe a stick of glue or something like battery cells, etc. So a whole host of companies have resumed their operations partially. We start with Pidilite, where 2 facilities have seen some partial resumptions. Apart from that, Pratap Snacks as well. Their third-party manufacturers in Uttarakhand, Kashipur, Maharashtra and Haryana, all of them have resumed partial operations. Shesasai Paper as well has commenced operations in Erode. They expect slow ramp up until the lockdown days, which is May 3rd, and over and above that, they are also awaiting authorities' nod for their Tirunelveli unit. Navin Fluorine also has recommenced their limited operations at 2 plants, one in Gujarat, the other one in Madhya Pradesh. And finally, we have Everready, where they've received the government authorities' permission to restart partially their battery plant in Karnataka.
Okay, thanks a lot for that, Mangalam. The unfortunate part is that a large number of industrial hubs are in the hotspots. So although a large number of spots have been opened for activity, unfortunately, those are not the areas where you have too many industries. So there will be this slow trickling in of companies that start operations. We have some brokerage opinion on Reliance, which is looking positive, Sonia.
Yes, in fact it is. Morgan Stanley and Goldman Sachs have a 30% upside to the Reliance stock currently. So let me take you through the views. Morgan Stanley has an overweight call. They have a target price of 1,544 rupees a share. They believe the share price will rise in absolute terms over the next 60 days. The valuations, they say, are looking very attractive for Reliance at 12 times FY21 earnings. Debt reduction is the key pillar of their overweight thesis. They expect the EPS compounding annual growth to be at 27% over the next 2 years, and they say that Reliance is one company that will emerge stronger after this storm, and they will gain market share across their verticals with better profitability once COVID plays out. Goldman Sachs has reiterated a buy with a 30% upside potential. They have a 12-month target price of 1,550 as well. They say that the unique hedges in the hydrocarbons business will drive positive cash margins even during a recession phase. The contribution from the fast-growing consumer businesses will reach 50% over the next fiscal year, and they expect a rapid earnings recovery and a significant step up in the free cash flow. So 2 positive brokerage reports coming in on Reliance.
Okay, thanks a lot for that. It's one giant stock that can move, but that's the disclaimer. The company owns this channel you're watching. With that, we have to take a break. We are going to come back with Devin Choksi of KR Choksi Investments, who is going to analyze for us the trends so far and what he may be buying.
When I wanted to take a life